welcome everybody to I believe this is our third Tuesday's Talks. And we have the distinct pleasure of having Dr. Paul Bates join us today. And I'm so very happy to be able to call my friend Dr. Bates because I know this journey has been a very, very long one for him, but a very rewarding one as well. And while we all would like to have honorary doctors, there's nothing like an earned doctor because you truly earn it. And so we're really, really happy for that, Paul, and wish you all the best as you continue that journey. Paul's going to talk about, well, this was actually a request. We got this request from a couple of people to have Paul talk about what's happening in the markets, and his title of Bombarded Markets. Let me just check the ticker. As it says right now, we are down. Actually, it's improving. It's only down 143 points. When we first started, we were down 250 points. So it seems like the morning is providing that level of uncertainty that we ended off with yesterday as well. Just for an update for everybody. So next week, we have Tina McCorkindale, President and CEO of IPR. She will be talking about a new study that is just being released on internal communication. So anybody that is interested in what we need to do as internal communicators, that will be noon our time. The following week, Tuesday Talks will be on Wednesday with Linda Rutherford, the Chief Communication Officer from Southwest Airlines. Linda obviously has lots to talk about a sector that is in complete chaos. It was in a chaos before COVID, and it's certainly in a chaos now. And so that will be an important talk, and I will continue to feedback or send out those invitations as we've developed them as well. And if you have any ideas or any things that you would like to hear from or you'd want for us to talk about, please then forward those to me. So without further ado or delay, Dr. Paul Bates on Bombarded Markets.
Thank you, Dr. Flynn. I have about 15 things that I'm going to talk about, which will last, I don't know, maybe 15 to 20 minutes. And then I thought we could throw it open to questions and just see how things are going. So maybe just, if I say something that you want to come back to, maybe just make a quick note of it and please come back to it, and we'll do our best to go a little bit further in the particular topic.
And Paul, I'll moderate the chat line too. I'll watch that for you as well. Okay?
Thank you. I should state at the beginning that I am no longer licensed as an advisor or portfolio manager, so you can't hold me accountable for anything that I might say. So as of yesterday, as we were talking, just as we were getting started, light sweet crude, which is the crude oil that is used most to be processed into gasoline and naphtha and that kind of product, in one day sank by almost $56 in terms of the May futures market to close at negative $37, which is unprecedented, and the fundamental reason for that is that they got nowhere to store the stuff. We've completely run out of the ability to put the stuff into storage. So that's of course going to back up all through the supply chain to the producers and ultimately to the people that drill. So we'll see what happens. Prices seem to have recovered a bit, although there's still some suggestion that the June delivery for futures will also turn negative, but without a doubt, we're seeing incredible volatility. One thing I might say, though, at the very beginning is that the Dow Jones Industrial Average started in 1896, so 124 years ago. I remember being head office of Fidelity in Boston, and they have a place called the Chart Room, which is this place that as people walk by, they sort of lower their voices as they walk past it. But in there's a chart of the Dow Jones Industrial Average, and I remember seeing the crash that Terry just referred to in 1987, which we all thought was horrendous at the time, looked like a tiny little blip in the overall chart. And I think it's worth keeping that in mind. But just by way of background, I spent about 35 years in the capital markets. So all of my accreditations up until I started this new journey were in finance and accounting and all of the things related to the market. I began my first leadership position in the investment industry literally months before the crash of 1987. And then from there, we've seen really three more major issues in the market. So that the crash, it was known as Black Monday. The crash of 1987 was largely driven by what was then relatively new computer trading. And it was a major issue in the market. And it was triggered also by some changes in international monetary policy. But the big issue was this kind of unmanaged and largely to some degree misunderstood methodology for computer trading. 1999 came the dot-com bust, which was driven by really excessive trading and pricing being pushed up for some of the new then internet-related companies. In 2008, following significant deregulation in the financial industry and a real failure in derivative markets, we saw a major correction, which actually turned into a recession. And then we come to today, COVID-19. I do think that this is a very different crisis. This is far more widespread. It involves literally every economy around the world. We are getting used to understanding what these massive changes that maybe for some of us we didn't even realize was happening in the last 15 years. Supply chains have changed dramatically internationally, and so we're seeing this crisis really impact every aspect of the market in every country. So there's a massive slowdown in the global economy, which is, for example, why we've seen this unprecedented change in the price of crude oil. It doesn't mean that there aren't opportunities, although I think it does mean, I'm inclined to think that when we come out of the other side of it, we're not simply going to go back to everything that was happening the way it used to be happening. And I'll get to that in a few minutes. Some people ask, is it going to be a V-shaped recovery where it goes down fast and it comes back fast? I tend to not be of that group. If anything, it's likely to be probably a W-shaped recovery where there are some ups and downs and eventually we see a recovery. I mean, some of the more negative pundits think it's going to be an L-shaped recovery. In other words, it's going to go down and it's going to go sideways for a very long time. I'm not so sure about that. I do think that we're going to see incredible amounts of new innovation. I was listening to an interview with Jim Hackett the other day, who's the Chief Executive Officer of Ford Motor Company. And it was sort of interesting. He was talking about one of the things that they're working on is to have new surfaces in new vehicles constructed with new microstructures that won't hold viruses on their surfaces. So I mean, there's a tiny, tiny example of the way that companies are beginning to think about innovation and how they use that innovation to return to new markets or to markets that are looking for new things. We see interesting comparisons in technology. IBM stock has dropped 3% in the last quarter. The only part of their business that seems to be holding up is their cloud-based business. But IBM has seen, many quarters of sort of reduction in their business, and this last one has been quite significant. On the other hand, companies like Netflix, companies like Shopify, companies involved in technology innovation for online learning and things that we're doing, online communication, are moving up. So it isn't simply massive confusion or contraction, I should say, across the board. I do think that we are going to see a much greater interest in the way that financial analysts do their work. And they're going to be looking at the comparison between fixed cost and variable costs. Companies that have managed to convert fixed expenses to variable expenses, learning how to manage capacity, and really understanding how to have that sort of just-in-time approach to some of the things that they're doing. We'll see their market performance improve, and we'll see their business performance improve. We're going to be completely rethinking supply chains. I think this is going to be a very big issue in the next year or two, as companies really begin to understand whether they are too reliant on one single source of inputs in terms of raw materials and so forth. So, I would be inclined to see some significant reorganization around supply chain. Organization structures are going to change dramatically. We've learned almost in a heartbeat how to move some of our activities away from the office environment and the large working environment that we've been used to. I think that we're going to change from sort of larger M to micro M, and what I mean by M is methods of organization. And so in the last 10 to 15 years, we've moved from very vertical structures to sort of broad nodal structures in the way that businesses are constructed. But I think we're going to see that nodal structure be analyzed even further into what we might call micro nodes, literally down to one or two people working together. Sadly, I think it's also going to mean that we're going to see workforce changes. I think we're going to see more and more situations where companies seek to reduce the amount of fixed expenses with employee bases to more variable. So I think we're going to see, more contractor kind of positions as opposed to permanent employee positions. I mean, the gig economy has already grown dramatically, although sadly, it's been the gig economy that's been on really, the sharp end of suffering, in this current crisis. But I think we're likely to see that continue. I think we all need to relearn or learn for the first time how to behave like entrepreneurs. What is it that entrepreneurs have to do that we have to do differently in the way that we do our business? We need to learn more about adaptive capacity. How can organizations and how can we as individuals be more adaptive to changing environments? How do we look out into our near-term futures and try to think about how we need to construct the way that we work to be more adaptive? I think that we are also going to see, this notion of virus testing. I think that's going to be pervasive. I think we need to imagine workplaces that allow for greater separation of people in the workplace. And what does that mean? How do offices reconstruct themselves to allow for people to come together, but not in the same way that we used to come together. In the manufacturing sector, and many of you are involved in this, Josie may want to speak about this. I think we're going to see a really rapid increase in innovation around robotics. I think we are going to see massive and rapid changes in the use of robotics in the manufacturing sector, for example. I think there's going to be a new focus on understanding risk. I think that, you know, the risk management committees of organizations and the risk management committees of boards of directors are going to find themselves looking at far expanded and more granular examination of what are the kinds of risks that are out there. What is the likelihood, what is the nature of the risk, and what is the likelihood of it occurring. We're going to see much more increase in the challenge to the daily dynamics of interaction and how do organizations respond to the need for that, and how will technology innovators respond to the need to that. On a personal level, I'm sure, like me, you saw some of the TV footage recently of, you know, mile-long lineups of cars for food banks. You know, what it made me think about is how are these folks going to deal with changes when they reach retirement years? Unfortunately, the millennials are getting hammered in this current situation, and partly, sadly, it's because we have lived in a world where we've spent most of what we've earned, as opposed to really getting to a savings discipline. And so, just thinking about every element of our lives, from, you know, the way that we eat, you know, the cost that, you know, the amount of money that we spend on housing, on car purchasing, all of these things are going to be, you know, factors that change our personal lives. We need to go back and, you know, study to some degree, you know, the way that, you know, these kinds of things change during wartime, during the recession, during other periods of extended and broad decline in, you know, in personal security, financial security, and how we cope with that. So, you know, those are some of the things that came into my mind as I was preparing for our chat this morning. And at this point, I'd love to just, Terry, if it's okay, just throw it open to see, you know, if this sparks any particular questions, or indeed whether there are other questions that I may not have touched on specifically.
Oh, Paul, just a fascinating array of societal, economic, workplace issues that you raise. I think that there, you know, I've been thinking about this a lot as well, that there will be a new social contract that is negotiated in the world as a result of this.
I mean, one item that I didn't touch on and that you've just reminded me of is we're going to see a rise in nationalism, and some of that will be appropriate. A lot of it will be, unfortunately, very hazardous. You know, as from a humanity perspective, as we go forward. So anyway, so yeah.
Well, and that started last night with the tweet that the borders are closed to immigration in the United States, and the rise of these liberation groups that Trump has fomented across the U.S. Okay, so let's start. Rob Esselman from Waterloo. I feel like we're back on CFRB, right, with the Paul and Sally show. Question: in the next 12 months, with respect to employment, with a massive resetting of who works where, will employers or talent have the advantage? What types of traits does Paul think will be most valuable?
I think the most important trait will be evidence that we are able to hold our heads in very volatile environments, that we broaden our knowledge base. That we look into understanding, some of the characteristics of resilience, for example, and adaptive capacity. I think, Warren Bennis, one of the great, or at least I think one of the great current writers in leadership, talks about adaptive capacity as being the number one attribute of leadership, or the required number one attribute of leadership. And our ability to, really spend time, learning what is going on, thinking about responses to it, learning how to call on a breadth of different sources of information so that we can arrive at recommendations with a sense of clarity. I think the other one, I would sum it up as having an awareness of the need to be present. This is, I read, I don't know if any of you have read General McChrystal's book. He talks about the need, now he's speaking about it from a military perspective, but I think it's important for us in every aspect. This notion of understanding how to be present with people, how to come alongside folks, and be, with them in the moment, and with them in a way that is constructive, learning how to really be willing to open conversations about dilemmas, and how to think about what kind of analytics we need to do to help us through those dilemmas. So yeah, this adaptive capacity, I think, will be really critical. This is, for example, where programs like MCM come to the fore, frankly. The ability to tie a breadth of different, elements of the economy, elements of business, and then turn them into understood communication. What's interesting is, I think the only bank CEO that has gone public is Victor Dodig with CIBC.
Right.
I haven't seen any of the others do that.
They've done full page ads, but nothing.
There are some full page ads for sure,
but nothing.
In fact,
nothing video. That's an interesting point as well. Okay, you're moving on to the next one. Good question, Rob from Waterloo. Next question, Tony from Ottawa, from snowy Ottawa. With a shift to more individuals trading and investing from home, how do you think this will affect the markets?
That's a good question. I do think that sometimes market swings are amplified by day traders. Although, to tell you the truth, I don't think that matters. The markets need liquidity. I mean, if you think about it, every single transaction has two people involved in the transaction. One's a buyer, one's a seller. Each of them have completely different views, right? They have opposing views. But without that, there'd be no trading. And so, in a way, I see active markets being of benefit to the marketplace because the liquidity is critical. The one thing that I would add is don't become a day trader today if today is your first day as a day trader. I think that there is an old saying that bears get rich, bulls get rich, pigs get slaughtered, right? So I would make sure that you're trading in an area that you truly feel that you have some fundamental knowledge about.
It's probably wiser to go run in between cars on the 401 than become a day trader today, right?
Yes, today's the first day. That's for sure.
Okay, Paula from where is Paula? Paula is from Montreal, of course. Question, going back to the comment of expect a rise in nationalism, we are already seeing a call for buy local. Could that become a long-term trend?
I think to some degree, yes. I go back to the earlier comment. I think that none of us really understood the breadth and intricacy of the supply chain relationships that exist in the marketplace today. I mean, who knew? Well, I certainly didn't know that one of the primary manufacturers of N95 masks was Northern Italy. So, there's, just one example. And so I do think we are going to see an increase in a search for multiple sources of product as opposed to single sources of product. So that I think that is an opportunity, actually. I think, there are ways, and we've seen already the way that many companies in Canada have innovated to shift their manufacturing facilities from one product to a product that is required currently and desperately. And so I think we're going to see, a broader rise in new sources of product. I think the critical part is that that also brings some risk. In the Hamilton area, for example, a huge amount of the economy is based on small business. And small businesses are the first down in terms of these kinds of circumstances. So there are two sides to it. But yeah, I do see. There's a political side of nationalism, which I think is dangerous. There's an economic side of nationalism, which will bring new opportunities.
Lindsay from Winnipeg said she was talking with a business strategy professor at the University of Manitoba, and he suggested that trade agreements will become more regional, and we will be moving away from overly large models of globalized trade agreements. How might that impact Canada, which is largely an export economy?
I think your professor is probably right, Lindsay. I tend to share that perspective. I actually think it should be net positive for Canada. So I think that there are opportunities for us, and remember I talked about thinking like an entrepreneur, right? I think there are opportunities for us that we may have thought we couldn't go after because they're already dominated by major supply chains. I don't think that's true anymore. I think that there are ways for us to insert ourselves. If we can find those characteristics of our product and the way that we bring that product to market to be innovative, particularly in the online world.
Great. Gail from downtown Toronto. In 2008, there was a shift in corporate acquisitions. How do you think this pending recession, and some say possible depression, will change the new way companies conduct IPOs going forward? Thinking of those who missed the pre-COVID wave and those who recently went public, such as Aromo.
It's a really good question. One of the things that the current market does do is it causes the analyst community, and particularly the long-term hold community, such as pension funds, to rethink the ways that they value organizations. And I think that actually represents a sort of more realistic view of the way companies need to present themselves to the marketplace. If we look at, I'm personally not particularly interested in the cannabis sector, but it's an element of the market today. It's part of the index, so we have to look at it from an investment point of view. But if you look at the way the recently introduced cannabis organizations have fared in this market, we are beginning to see a fairly dramatic rethink in terms of what actually what actually counts as being valuable to an enterprise. And that's where I go back to organizations that are extremely flexible in the way that they are constructed. You know, the difference between fixed cost versus variable costs. You know, one of the reasons that I never went into the heavy equipment business, for example, is that, you know, I was always afraid of businesses that had high fixed costs because, you know, once you got it, you got to produce something.
Right.
And if, whereas variable cost businesses tend to be more nimble. So, you know, I think those are some of the factors that will go. I think we'll still see new issues. I think the companies that exhibit some of the characteristics that I've just described will fare reasonably well. I think companies that are showing that they can add value into some of the things that we're seeing now, for example, you know, such as e-learning and, you know, these kinds of enterprises will come to the fore. So I don't think it's going to be, you know, a silent market for new issues, but I think it's going to be a very selective market for new issues.
Paul, you mentioned about the cannabis sector, and because the market hadn't settled yet, is it more likely that consumers will go back to black markets rather than, because of the continued disruption in delivery and distribution and, you know, the carnage that is being levied throughout the cannabis sector?
Certainly those that are more focused on medical applications and therapeutic applications will probably do okay. You know, those that are more focused on the retail market, I've been thinking the same thing, actually, Terry. I think there is, and particularly as, you know, in some cases there's been, you know, forced close down of some of the retail outlets. You know, I do suspect that some people are going to go back to the black market. You know, whether that continues, I don't know. But certainly the froth, if I could use that term, in the way that the marketplace has been looking at the cannabis sector is certainly gone. And, you know, we're going to see far more intensive analysis of the viability of these businesses in the way that they're constructed and in their supply chain management.
Right. Well, I think this will be a long-term, you know, look at the Ford government's decision to privatize distribution rather than going through the LCBO when you have bricks and mortars there, right?
Yes.
If anybody has tried to get into a liquor store, there's a lineup to get in there.
Yeah, I think that's right.
You know, that I think that they miss this, they misguessed on this, not in all knowing.
And it also brings, you know, some interesting things to light. I mean, one of the things that the government said in support of keeping the liquor stores open was their view of the number of people that are actually have dependency issues around alcohol. I mean, surely the same issue applies to cannabis, right? So, yeah.
Okay, so we have a mystery caller, Galaxy S9 from, I guess, the Galaxy. This is catching some far distance here. What is your view on how voting will be constructed going forward? May we see a shift to it online, new technologies that would secure our data, both in provincial, federal, and county level?
Hopefully the Galaxy caller is not from the Ontario Securities Commission or from any political party. So I think there's a plus and a minus here. I think, yes, this is going to make the world rethink about the somewhat archaic way that we go to the voting booths and, you know, put a piece of paper in a box. But that said, you know, so far the online systems don't seem to be particularly robust and have, you know, and have fail-safe mechanisms that, you know, we can rely on to, you know, a 99.9% degree. So there's another example of, you know, an opportunity for innovation. You know, to be frank, and I don't mean this to be as pejorative as it sounds, but I can't believe how backward the U.S. polling system is. I mean, we're not far behind, but we really need to figure this out. We need to find a way to, I mean, we've got integrity in the way we use our credit cards and debit cards. Why can't we bring the same level of integrity to a voting structure? So yeah, I think we will get there. Whether we get there this year, I don't know.
So a couple of people asked the question about real estate markets, residential and commercial.
Yes.
My daughter and her partner took possession of their new, well, not new, their new home to them, 24-year-old condo on March 1st.
Yep.
Perfect timing. It reminded me of when Stephanie and I took possession of one of our houses in October of 1989.
Yeah.
The only time that we lost money in the real estate market. So housing, so residential, what do you think about that? And then Tony was asking, what do you think about the commercial real estate property value, given the fact of this trend of pushing people into their homes to work?
It's a great question. My sense is that the buying a new residential home today is going to require some patience if we bought it on the expectation that there's going to be, a continually strong market and prices may rise in the short term. I don't necessarily see that there's going to be a massive reduction in value, but I don't think there's going to be a rapid increase in value either. One of the unprecedented things that we've seen is the way that the banking sector has obliged homeowners in terms of mortgage deferrals and so forth. But that's only going to be temporary, and hopefully, your family and anybody else that's buying for the first time today is realizing that they may need to go to a thrift shop for furniture, instead of buying the best that Leon's has to offer. I think it's one of those times when we really need to think about, how do we get to the least of expenses rather than going bananas. I do have a feeling that prices will be flat, but I could be wrong. I'm not a real estate expert by any means, but I have a feeling that prices could be flat. On the commercial side, we are seeing a lot of differences in the way that commercial the landlords are dealing with this. Some are being very generous in a sense that they are, they're offering, for example, deferrals of base rent, although, there's no deferrals of operating costs, but there are some deferrals of base rent. Others, particularly in Metro Toronto, I think, being a little more difficult to get those kinds of concessions from. Keep in mind that most of the holders of commercial and industrial real estate are very long-term holders. They are the pension funds and the endowment funds of universities, for example. And therefore, they are very much taking the long view. So I don't think you're going to see necessarily a lot of weakness. I don't think you're going to see a lot of panic selling in the commercial and industrial space. The only place where you could see some pressed selling is probably in the personal real estate space, and I think that's why we're seeing the banks, because banks aren't interested in owning property, right? So that's why we're seeing that willingness for them to be, fairly generous with their deferrals. Some of the banks are offering they're up to 6-month deferrals.
What do you think about? Will there be the same situation as 2008, 2009 in the U.S. economy, where you had these foreclosures that that people that are liquid and well positioned can take advantage?
There certainly could be. One of the fundamental differences between Canada and the United States is that in Canada, if you take out a mortgage and your house ends up becoming worth less than the mortgage, you still owe the mortgage,
Right.
except in Alberta. In the United States, in virtually every state, if you have a mortgage and the house that you have drops to a value below the mortgage, you just walk into the bank and throw the keys to your house on the table and say, thanks, it's yours now, and you walk away. And that hasn't changed from a legislative point of view, I don't think. There might be one or two states where it has. Florida was the prime example, right? Because in many cases they were second homes that were owned and so forth, and people just bolted. They just walked away. And so you can really, in those situations, you can see really the bottom fall out of the valuation of these properties. When we see how quickly individuals in the United States are running out of short-term money, where we're seeing people driving 2-year-old cars and in a lineup for food banks.
Yeah.
Right? You realize that they were, there was research done a little while ago that said, the majority of the population is $600 away from bankruptcy, and it's turning out to be true, right? So, and this is why there is, this desire to get markets reopened. Trump is doing it, I think, purely for political reasons, but from an economic point of view, this is unprecedented. Which is also why, by the way, we've had an unprecedented response from the central bankers and from governments. I mean, the amount of money that is being pushed into the system is not just for altruistic reasons. There's a need to try to put a bottom on this carnage that's going on.
Question again from Gail in downtown Toronto. With the possibility that the knowledge worker will continue to or increasingly work from home, do you foresee a shift in salaries and incentive package changes?
Yes, I think there could be. I think there could be, a knowledge worker equivalent of being an Uber driver. That might be a bit extreme, but businesses, I remember the days in the first 2 or 3 years, literally, when I started my own business. The only thing that I wanted my chief financial officer to tell me was, how much cash do we have? What's our cash flow? What's our cash inflow? What's our cash outflow? And in many cases, salaries are for many companies a significant part of that cash flow. And how do they change fixed expense to variable expense? And one of the ways, Terry, you and I have lived through a period at the university, right? If we joined the university when I came, I became part of a defined benefit pension plan. I don't know whether by the time you came that was still in place, but today every new employee at the university does not have a defined benefit plan. They have a defined contribution plan because these organizations want to get away from the fixed commitment of making contributions into a pension plan. They want to leave it up to you to worry about, and they'll contribute to it. But it's changing the nature of the obligation. So
Good news is I started on the same day as you did.
That's true. So yeah, that's right.
Safe so far.
You look so much younger than I do. I don't know why that is.
That might be a function of age. And what year that I was born in. That's simple. I think that was it. Nothing more than that. Okay, so more questions as we're coming up. We got a couple more minutes left. Can we expect cost reductions across the board, rents, cost of living overall, or will inflation be similar to before COVID levels?
It's a good question. One of the things that we're going to see after this is remember that the governments, when they send out all of these checks and these stimulus packages, are borrowing from the future, right? They have a fixed source of income and a variable approach to expenses. So, these obligations are being funded by bonds often. And so in the years ahead, those bonds have to be paid off. And so look for, some austerity measures, as we get into the years coming up, in the next 2 to 5 years post this. It could be, not necessarily will be, it could be somewhat inflationary. Some countries that went, crazy over these kinds of things, think of Greece, for example. The inflationary element is lurking in the background. So careful fiscal and monetary management will be required to stave that off. At the moment, I don't think it's necessarily going to be inflationary. We could see people try to increase the unit cost of price for, some products that we buy at the grocery store and in the pharmacy, for example. Particularly around meat, we're seeing shutdowns of major meat processing facilities. So food, food prices we could see some inflation there. But I'm not convinced at this point that we're going to be, subject to across the board, rampant inflation.
Well, especially given the fact that, grocery stores have raised their salaries of their front end workers by $2.
Yep.
Others are, going to give incentive back to retail workers of significant incentives to get them back as well.
And they're going to get that back.
Yep. I mean, so the question really becomes, how much hurt are we going to pay in the 2 to 3 years once this settles out? I mean, the hurt won't be there. That, taxes are going, the only way that government's revenue gets our revenue is through taxation, right?
That's right.
So taxes are going to have to go up. The cost of those goods and services are going to have to go up. Yeah. And so we could see ourselves back in that period, of the 1980s, right?
Yes, we could. I mean, if you do an analysis of some of the major food chains, Loblaws, for example, you will realize that their net margins are already razor thin, right? Right. So, they pray for volume, not margin. And so, these minor things that we look at, in some cases, are going to destroy those margins. And so, yes, we're all going to see some price inflation for some of our day-to-day products that we use.
Last question from Lindsay in Winnipeg. In times of recession, large infrastructure projects seem to be one of the ways the government has kickstarted the economy again. For example, Harper government did it in 2008. Will it be the same in post-COVID?
I think it will, and I think that it could be anything from road repair to to major initiatives. So yes, they will use every facility that they can to stimulate those kinds of projects without a question.
Right. And if Justin and Doug called you this afternoon, what would your advice be in terms of continuation of stimulus?
Yes.
And thinking about financial future of the province and the country?
It's a great question. I actually think the government has done a fairly good job in terms of looking for short-term stimulus at the basic level, which is us, you and me. I think that the risk is that they don't have enough work going on to say, what's at the other end of this. And so I would be encouraging him and the Minister of Finance to really be putting together round table groups of some of the the best minds in the country, from the large corporations, the pension funds, all the way down to retail, to really understand how to stabilize and find ways that the coffers can be refilled without too much overreaction in terms of some of the ways that we've looked at it. It's easy. It's easy to get into trouble. It's harder to get out of it. And so, some really good long range, multi-dimension, multi-opinion think tanks that aren't simply of one stripe from a political point of view, but get the best minds around the table and get a breadth of minds around the table to really be looking forward.
Yeah, somebody just asked the question, okay, well, that's good for Ontario and central Canada, but we have economies in the east and in the prairies that are just being hammered.
Yep.
Of course, obviously Alberta with the oil sands and everything else. So how do we balance these kind of national, federal, provincial issues to get people in Newfoundland back to the same degree as people in Quebec, BC, and Ontario?
Yeah, so there has to really be micro analysis of this. There has to be, among those think tanks that I talked about. They have to be have this broad conversation with the universities in all of these environments, and frankly not just the business schools and the economists in these universities, but people that are working on the ground or potentially on the ground projects. We need to be including chambers of commerce and from these communities. There needs to be a large opening of invitation for commentary and inclusiveness. And to be honest, central governments of all stripes are not necessarily good at that, right? Because it takes time, and it takes effort, and it takes listening in the most profound way. But I think we have the capacity to do it. I think Canada, if it wants to, and I think we want to, can actually lead the world in having these kinds of inclusive dialogues, and not seeing leaders promoting foment across the country. It doesn't help anybody.
So I want to wrap it up by honoring the first place that Paul and Sally came to Canada when they emigrated from England, and that is Nova Scotia. And Paul was a resident of Dartmouth and lived there for many years. And I know that Philip Savage, whose brother is the mayor of Halifax, and we have lots of friends from around Nova Scotia are reeling right now as well. And well, we're all in pain. Our thoughts and prayers go out to those that are trying to make sense of this horrific massacre that took place. So Paul, on behalf of the MCM community, I would never, ever, ever have thought that the highest number of participants that would show up so far would be, in fact, for your financial doom marketplace session. So there's a high bar.
Everybody got their money's worth.
You created a high bar here. Could you imagine before anybody started the MCM program said, hey, look at in years from now, you'll be attending sessions on financial marketplaces? People think, yeah, right. Anyways, thank you, Paul, Dr. Paul Bates. A man, as I mentioned before, we started our journey at McMaster on the same day.
That's right.
10 years ago, this past April 1st, we started.
In fact, if I remember correctly, you were literally finishing your doctorate when you joined us, right?
I was. I defended on the 20th of August. And 10 years ago on April 1st, you and I and a few others started a different journey at
We did.
McMaster that took a great toll on us. But this friend has been a great mentor to me. He means a great deal to me, and I'm just so happy that he still continues to be involved in this program.
I am too.
And I wish you and Sally all the best, and please stay safe. We'll, especially as you continue your treatments, but stay safe and stay well. And we look forward to celebrating this doctorate when we get to relax our social distancing.
I've already been promised by at least one member of the faculty a glass of scotch, so I look forward to that.
Damn, I'll give you a bottle. That's right. All the best, everybody. Thanks a lot.
All the best, everyone.
Have a good week. Bye-bye.
Yeah.